Hey everybody, welcome to our Sunday Notes Live. Great to see everyone. Happy Sunday, everybody. All right, so thanks as always for taking some time out in your weekend to take a look at what's going on with the markets, getting a jump start on the week by taking a look at the open. It's going to be an interesting situation tomorrow in that we have a lot of bank holidays abroad where we have still the Easter holiday being celebrated. And I believe there's a rule in the US where because we had Friday closed, uh, then when you look at the market can't be closed 4 days in a row. I believe that's basically the rule. I don't know if it's an actual a rule or not, but I believe the market can't be closed 4 days in a row. So we'll have the market open tomorrow. But again, it'll be very illiquid when we take a look at what's going on. However, that being said, when you think about the hot zones that we're going to be dealing with throughout Monday, it kicks off with the IMF meetings. These are their springtime meetings. And the thing to remember about the springtime meetings is it goes all week long. I think it goes into next week, and that means we might get these sort of sporadic, separate sound bites coming from, of course, a lot of the speakers that we would typically associate with the volatility of the central banks. We also have Ballard, who is a voting member, on Monday, right after the bell. And then Tuesday starts sort of our typical week. Everything from housing starts and building permits. We've got plenty of home builders construction data this week. Existing home sales on Wednesday. So it should be a very, very interesting week. And then you'll notice, and I don't know, I'll double check on the time, but it looks like on Thursday we're going to get a double dose, 2 scoops of Kapow, 11 a.m. Eastern and 1 p.m. So keep that in mind. Friday is going to be pretty quiet, but Thursday could be very interesting as we have potentially, at the moment, the way the calendar looks, a double dose of Kapow. Double our fun. All right, so if you're in the options room, futures room, or my Sector Secrets Mastery room, we've sent the link out for these notes and you can check them out. By the way, if you notice for whatever reason, and I think the Lorna bot has since probably addressed this, that you're going to have to cut and paste the notes. Sometimes the notes are a little wonky. I do know on the app, so if you're in the room trying to open it, it might be a little problematic cut and paste. But if you're on the Simpler Trading mobile app, it looks pretty darn good. So the alert on your Simpler Trading mobile app, where this is just very, very readable. You can turn your phone sideways and even get a good look at the charts. But that is already sent. So happy reading. All right. So as always, thanks for tuning in. These shows, whether they be Sunday Weekly Notes Live or our Charts and Coffee show Monday through Friday, they are all about your questions. If you have any questions about the notes, that's why we have the Sunday session. I'll be coming back to a lot of what I wrote in the notes. In fact, let me go back there one more time. So if you'll notice, aside from the hot zones, the very opening paragraph, has the specific broader sector symbols that I'm going to be keeping an eye on. Remember, it doesn't make sense to, in some mechanical rote way, just go through all the sectors and break down the technicals and the levels in each one, because what that creates the habit of is just this sort of, oh, well, I have to go through all my symbols and I have to just know where all the levels are, even though there may be no real reason to be focusing on those symbols. The focus on the symbols comes from specifically the fact that they offer some sort of edge, some sort of advantage. And the best advantage is an uptrend. The second best advantage is a downtrend. So we want to prioritize the up and down trends to start with. And that's what you'll see in that first paragraph of the notes, the specific symbols that are on our radar. Now, once we have that in focus, then we can start to look at layouts like this to start breaking down not just the structure of the individual stocks within the sector, or the boats and tide, as I like to call them. We can also try to find the outperformers, and that's what this layout is all about. All right, so with that being said, let's jump on into the questions. And first one up. All right, good afternoon. If a stock is double green or red, right, do I pay attention to how long the stock has been in a double green or red? Absolutely. So let's take a look at a recent trade we closed out in the Mastery Starbucks. We were short Starbucks, and yes, I think that when I'm prioritizing an outperformer, part of that outperformance is going to be the length of time that that trend has had traction, that it's had some time to settle in, to really have what I think would be a broader expectation. Oh, that's not what I wanted to do. There we go. Have a broader expectation of movement to the upside or the downside. So yes, absolutely, I am looking at those. Let's see here. Yeah, absolutely. I'm looking at those moves and the length of time they've had that structure. Now, if we had a specifically longer period of time that was red or green, and then we went neutral on the trend just for a little while, see, I'm going to be a lot more confident to stick with the path of least resistance being down when it's double red or up when it's double green, even when we have a small period of time where we go neutral, where we go yellow. I'm going to be a whole lot more confident to stick with that trend when we have that kind of very short-term neutral structure. And when I look at last week, we closed a lot of trades out last week, and in my sector secrets trading account, the one that mimics what we do in the mastery, that's about as light. I'm looking at some of the positions right now. It's about as light as we've been in a while. It's about as low the amount of holdings. So I'm definitely looking at, to your point, the double greens and the double reds that we still have plenty of. They're in the notes, and at the broader sector level. And then we'll start to dial in and start to look at individual stocks, because sometimes that is the better choice, right? An individual stock over the tide. Remember, we have earnings, so then that's another sort of twist in the plot that we have to deal with. But yes, I absolutely do, and those are the reasons why. Would I be looking for a deeper pullback in XLV before I take a position? So XLV is one of the symbols that I'm very much interested in getting long. It's actually probably the only reason the S&P is still even above the 200 propulsion. It's one of the only reasons the S&P is, unlike the Russell and the Dow and the Nasdaq, which are all below their respective 200 propulsions or 200 EMA. Let me show you what I mean. The S&P, there we go. The S&P is still, it's been buoyed above it for a while. Now, the reason I called the video on, here we go, the video on Friday, why the S&P is going lower. Look, I'm not trying to prognosticate. I'm not looking into my crystal ball and seeing where the markets are going. That's not the point at all. When certain levels are broken, the idea is, what does that tell us about that broader average? So check out that video. It's back at the Simpler Trading YouTube channel, and you can see, the specifics as to why I believe the S&P is going lower. And one of the reasons, well, two of the reasons, is that if we think of any of the indices as having a 3-cylinder motor, those of you that are Triumph motorcycle fans, you're well aware of the power of a 3-cylinder motor. If I'm firing on 2 out of the 3, for the most part, either choppy or lower, 1 out of the 3 higher, you know that that S&P sort of levitating in a way that was stronger than the other indices is probably because of this thing. So if I want to be long or focus on any kind of buy in S&P, I'm really going to redirect that to a buy in the financials. How deep of a pullback do I want? Mark, I'm not even going to get the conversation started. I'm not even going to be concerned about uh, a pullback until I have a setup, until I have a level that would justify why I think buyers would be waiting at a level and willing to step in. So, I mean, on one hand, we could look at things like, let me go to Trading View for a moment. We could look at things like volume ledges to see where that might be. Look at all that volume right there. That's pretty nice. Or I could look at something like a 21 propulsion. And I think we have a number of reasons to be, gosh, there we go. A number of reasons to be bullish in XLV, individual stocks and the broader sector. So the 21 propulsion would be great, but if you took a look at the Trading View chart that I just showed you with the volume ledges on there, you can see all that volume profile along the vertical axis. You can see why I might be very tempted to engage a market at a volume ledge with an aggro small position size and scaling again at the 21 propulsion. So yeah, that's the kind of pullback that I'm looking for there on XLV specifically. Every single symbol, every single chart that we look at, it's going to have its own characteristics. We're looking for the same things, but every single symbol is going to have its own characteristics, and that characteristic could be the propulsion dots, could be color of the grab candles, it could be volume ledges or Darvis. They're going to be the same tools that I refer to and rely on again and again and again, but the individual setup is likely to be just a little different from symbol to symbol, even from entry to re-entry in the same symbol. Every single one's going to have sort of a different collection of those tools stacked together, giving us an opportunity. All right, so thank you for that. Tim asks, how do I determine the price point for exits, target ones and target two? So Tim, it's going to go back to the same way that I'm often looking for entries: Darvis, propulsion, previous lows, gaps, psychological levels. Maybe it's using a slow stochastic. Maybe it's using a volume ledge. Did I already mention that? Volume ledge. On the way out, it's the same conversation. It's the same things. I'm looking at recent highs. I'm looking at Darvis. I'm looking at major psychological levels, etc. The one thing that I don't talk about a lot, and we're going to talk a whole lot more about it as we go into likely May and June, and that is, how do I measure volatility? And the way that I measure volatility, both intraday and end of day, is with historical volatility levels. So on a daily chart, it's a session-driven historical volatility level, a daily price movement range. And intraday, it's an hourly price movement range. So I'll put those historical price movement ranges in as another layer of understanding for what today's movement means in sort of reflection of what that symbol typically does. We do this hourly. We can do this on the daily time frame too. So hourly and daily. So, but it's the same tools that get me into, the same tools that get me out. What's that old saying? You leave the dance with the person you came. I kind of feel that way about trading. I'm not going to deploy a whole new set of tools if the support levels and the entry levels were discovered, and I have confidence in them because the tools that are already on my chart, it's that same set of tools that's going to help me get out. I hope that makes sense. Hey there, David. Is there a volume indicator on TOS I can use in conjunction with volume profile that is helpful? David, I like using my V-score. I like using anchored, specifically anchored VWAP. I don't believe in using rolling VWAPs. I'm more a fan of anchoring them. So anchored VWAPs. But if you've already got volume profile, a volume indicator on TOS in conjunction with volume profile, those are the two that I personally use. So I hope that helps. So that's all submarket sonar, anchoring a VWAP is akin to having a moving average of volume running across your price chart. The V score is akin to having sort of an overbought, oversold. How far have we wandered away from the mean type tool? Again, on your price chart. So I like to add those in, and then that gives me a lot more. Again, kind of going below the surface of price. I like to use I think I've done this here in Charts and Coffee, or even in the Sunday show, where I put an iceberg. Do I have a cool iceberg on the? Yeah, let me see if I have an iceberg. So I kind of look at the part of the iceberg that's above water as price, and that's where most traders live and breathe, up in here. But not only is that a small picture, that's incomplete, right? There's so much more going on with time, volume, and volatility to make up the four factors that I look at when I'm considering the merit of a trade. So thanks for the question. Hey there, Ray Ray. Thanks for all the amazing work you do to help. Oh gosh, Ray Ray, I would be talking to myself if you all didn't have the dedication and the willingness to put in the work that it takes to understand the market. So I appreciate you all taking time out in your day to understand more about how we're trading, how we're actually right now very, very productively, successfully trading this environment. That I just don't want anyone thinking that the folks out there, the quote unquote pros, I don't even consider myself a pro. That word pro means something very different in trading. We consider a professional trader, meaning a trader who is, I don't know what people assign the meaning to that is, full-time trader, professional trader. Well, if you're a professional, you have different exchange fees. It usually means you have some sort of association with a broker dealer, things like that. All right. I'm no expert in all that stuff, but I don't consider myself full-time or pro in that I'm not trying to spend all day long in front of the charts. But I just don't want you all to think that there's something out there that's magical and mystical, and that those unicorns out there can do something you can't. So thank you for putting in all the time. I appreciate it. I've gotten better as a trader. Gosh, you're 4 years. Wow. Wow. Thank you. I appreciate that. At this stage in my career, uh, not only do I want you to be a better trader, but I'll tell you what, you're then the gateway, and this is what I'm really after, to that next generation, right? So your friends, depending on everyone's age, your friends, your peers, your family, your kids, your nieces, whatever. Um, I want more people to be empowered to understand these markets are something that anybody can understand, and begin to at least chart and demystify. It's not as difficult. Look, some hedge fund managers and stuff, they have very complex trading strategies, and that's fine, right? I'm not a hedge fund manager. I'm not trying to do that kind of thing. I'm just trying to speculate on the direction of something for the next few days to few weeks. I was watching the new Warren Buffett interview with Charlie Rose this weekend. It was a great interview. When I look at what he's doing, I don't confuse that with what I'm doing. He doesn't even think about himself as buying stocks. He'll say, I'm buying a company. And then he puts a 10 to 20 year time horizon. That's not what I'm doing either with all of my capital. So I think that there is an interesting little place where retail traders can exist. And that's in that sort of smaller, few days to few weeks time horizon. And I think that we're not moving a lot of size. We're able to be nimble. We're able to be ninjas, just get in and get out, and no one's the wiser. And that just suits me just fine. So awesome. Thanks for sharing that, Ray Ray. I do appreciate that. Hey there, Giancarlos. Do I apply the same sector secrets technique with country? Yes. You'll notice that I put France, I put Brazil, I put Germany, Australia. Canada fell off the list, but there's a number of liquid country ETFs that we discuss. In fact, most of you know we've been on a tear with EWZ. Brazil's been absolutely on a tear, and we just got back in to Brazil last week on a shallow pullback, looking to scale in some more. So yes, absolutely, I agree. Hey there, that's exactly what I do. So, Giancarlos, it doesn't matter if I'm trading corn or Cisco or Canada. We're not. I'm not actually measuring corn, and I'm not measuring Canada, and I'm not measuring Cisco. I'm measuring the psychology, the human opinion, the human reaction, the fear, the greed, the confusion, the boredom uh, of that price action. So we're trading the emotions of people. I'm not trading a stock and I'm not trading a commodity. We're trading the emotion of people. And those tools the ones that I share with you all, I have found throughout my career, the decades at this point. It's so funny when I say that. Um, Universal and robust. They work on everything and they work well. I'm not going to have a cutesy setting for one stock or a cutesy setting for one symbol or commodity. It's universal. It's robust. So thanks for the question, and the answer is 100% yes. Hey there, David. I love the Sector Secrets membership. Really paying off. It is, David. It is my pleasure and it is my job. So thank you. On the point of validity, outside the 25%, would I say two candles on the wrong side of the wave would be a POV stop. So in the best sense of our trading, our point of validity would not be a paper cut percentage, although I love paper cut percentages. It would actually be a technical level. It would be a price and technical level. And I try to combine both. In fact, I look at 2022 going into 2023. I look at what is the mindset of someone trying to 2x their account versus someone who wants to 10x their account. And I'm not promising anything. I'm purely talking about the mindset here. I would say by and large, almost anybody can double an account. I've seen that so many times. I get emails. I see people who are able to take X dollars and double it. And it's oftentimes going to be lost, if not more. It's kind of like going on a diet instead of changing your nutrition. You lose a bunch of weight, but you gain whatever you lost back and then some. 2x mindsets are that way to me. 10x mindsets, right? A 10x. Gosh, I could 10x my account. The way that I trade in sector is about changing more of who you are as a trader, because you don't have to change much about yourself. You're just betting bigger. You're sort of slinging trades. Not you, us, right? All of us. We're sort of slinging trades. We're not really doing anything in any more a prudent fashion. I don't think you need to change or improve much of yourself to double an account. But to 10x an account, you really have to sort of rebuild. It's the opening of the $6 million man. Better than we were before, better, stronger, faster, right? That's really what it is. If we're going to continue on that 10x track, which is what I'm seeking to do, again, mindset. Part of what we have to do is understand the point of validity, not just a paper cut percentage, but to understand what are those more minor things that would invalidate a trade, and that is something I'm sure that we're going to continue to talk more about. But it does require traders to be a little bit more aware of what's happening day to day. So that's a big lead up to my answer. Yes, tier two candles on the wrong side of the wave would be a point of validity. Yes, that would invalidate the trend. However, invalidating the trend doesn't necessarily mean, David, that it's invalidated our trade, because remember, an uptrend broken, let's say EWZ breaks the trend, two red grab candles. Does that mean it's now a short? No, it just means now it's an overbought, oversold. Now we're probably looking at the stochastics sitting down here near the low, down here near the 20, and it just might bounce because it's oversold. I think we saw something. I think Starbucks. Let's go back to Starbucks again. That'd be a really good example of where it looks like, oh my gosh, we're starting to go neutral. We didn't get two green candles, but we started to go a little neutral. And look what the stochastic did. So even though it looked like we were trying to break the trend, we didn't here, right? I mean, clearly we just went neutral with 4 blue grab candles. But some traders might get shaken out of that unless they realize, what if we printed 2 green grab, right? And if you don't have the grab candles, please go, yeah, feel free, please go grab them over at countdowntrader.com, and you could click on the download links that are available over at that website and put these candles on your charts. They're not going to supplant really anything unless you already have color coded candles running on your screen. They're not going to supplant anything, only supplement. And so notice that we're not changing directions, are we? We're just looking at a different structure that's still directionally in the same bearishness or the same bullishness that the first trade that we put on was. Oh, and the Lorna bot's just reminding me that we are right 4x. We got a 4x winner right now on Starbucks by not getting shaken out. So great question, David. Yes, great question. Nike, can we short Nike? So Nike is part of the XLY, choppy, right? But is Nike itself a double red? Yes. So now we start asking ourselves, earnings, no problem. Still off in the distance, outside of our 642 window. There's an update. There's two updates about the 642 window that Trish has posted as content over at the Countdown Trader, and I attached a link to today's notes. So if you're taking a look at how I am looking at this week in the market, you'll see that part of it is instruction, and there's a link in the notes that takes you to the 642 earnings window conversation over at Countdown Trader. So, yeah, I would look at this probably a little bit more conservatively as two things. Stochastic. There's a couple interesting things that are part of classic stochastic analysis, and I'll just show them to you right now. Where's my handy dandy drawing tool? There we go. All right. So if we are able to hold resistance at the midway point at the 50, we're able to hold resistance there. That would bode really well for this area holding for just Nike to sink back into the range. When the stochastic just flies through that 50, that's usually indicative of a little bit more follow through. That's really it. So if we can hold the 50, that would probably bode pretty well. We have a number. I mean, take a look at all the Darvis. 1 Darvis, 2 Darby. Look at all this Darvis action back in here. Look at all of that. So there's a lot of reason to expect the closer we get to, say, 140, this is looking pretty darn good. So I don't have a problem with Nike to the short side at all. Yeah. And again, for anybody who might be having a problem opening the workflowy, sometimes the send in the rooms, that link can sort of get a little messed up. So just copy and paste the link in the notes, or just open it up on the Simpler Trading mobile app. So if you head on over to the mobile app, you'll see the alert with the workflowy. Tap that link and it opens right up. It opens right up. So if you're on the app, you can read it. It's very easy to read on the app. I made it very app friendly. So when I send these out to you all, wherever you are, you can read the notes. So if you're in the room and you're looking at the room alert, just copy and paste that workflowy link, and it should be fine. All right. So thanks for, it does it every now and then. It's just it either adds a space or it links to the next word, and it screws up the URL. When it tries to open up the URL, it's got some extra symbols or words in it. You could probably figure it out now that you know what you're looking for, and fix it really easy. All right. So next up is, let's see, hang on, gang. I'm going to get to the next question here. I know you talk about futures and sectors and stocks, but are there sometimes tickers which are not part of a major ETF but have a nice trend structure, double green? Do I trade those as well? So Prabish, do I like uncorrelated stocks? As a general rule, I don't. There's so many more of those than those correlated names. And so since I focus on relative performance, there's one or two things we can do. You've then got to find, let's say you find and what does that mean, uncorrelated? That means they're just not weighted in the actively traded ETFs and indices. They're sort of out on their own. And there's not necessarily anything wrong with that, but to do the relative performance, you need the relative part. And the predictability that we enjoy from relative performance being tethered to popularly traded sectors that are weighted within the index and the indices themselves, is a certain degree of predictability that we get because that stock is part of a bigger picture. It's part of something bigger than itself. And because of that, it's always, usually, I shouldn't say always, it's usually going to track with that other thing. So it adds a certain amount of predictability that an uncorrelated stock, it's unencumbered, which is both good and bad. It's got a narrative of its own, which again is both good and bad. So the S&P could be doing one thing and this uncorrelated name could be doing something completely different for reasons that are specific to it. That kind of turns into a lot more homework. It turns into a lot more uncertainty. So can you? Absolutely. Do I? Usually not. Usually not. And that's when I think traders start getting into meme stocks and whatever headline about a certain name is out there or whatever is being talked about on television. And my concern with that is, depending upon how you're finding these sort of hot uncorrelated names, most of the time they're going to be hot. Something is going to have happened for traders and investors to have their eye on it. Is once, I believe this, once something has already been discussed sort of broadly, it's gone mainstream, my feeling is that it's not necessarily going to move all that much more because the reason it's on our radar is because it's already made some usually fairly spectacular move. So I that's one of the many reasons I like to steer clear of those. How am I putting the multi-charts together? By weighting in the sector or the indices. It's a pure weighted look at the stocks that are inside the sector, and then we list them in order of weighting. Yep, that's it. That's it. All right. So as always, gang, that half hour just flies by. Thank you, as always, for joining me for Sunday Notes Live. Check out the weekly notes link on your phone, on your Simple Trading mobile app, or in the room chat. Just remember, you're gonna have to probably copy and paste the link because it's acting up, I think, today. But when I see you all in the rooms, if you have any questions about the notes, about my view about this week in the market, let me know, and I'll be happy to help. In the meanwhile, go enjoy the rest of your day. Markets are open, just sort of trickling lower, nothing too exciting here. S&P trickling lower, NASDAQ trickling lower, crude trying to trickle back up higher. So things don't seem to be too dramatic at all, nor would I expect it. Of course, being the Easter holiday, again, of course, happy Easter. We're probably going to see a little less attention in the markets, especially since we have the Easter holiday, bank holiday, rolling into tomorrow. All right, gang, be good to each other. Grateful for your time. I'll see you in the rooms this week.